All right. Well, hello, good friends out there. It is Doug with Trade with Doug. Man, I know I've been on another hiatus. Can you believe it? It's been four months since I've done another video. I'm glad to be back, and I hope you're ready because during that time, I've gathered up some heat, some serious heat, and I'm going to throw it at you just like that. So make sure you stick around. Welcome to another video with Trade with Doug. So let me fill you in here real quick. Let me address the elephant in the room about this 4 months. Well, if you remember last time, I was on a hiatus before that. I said, well, I was stuck in Europe, had COVID lockdowns. It was a mess getting back to the United States. Well, I also got married. Thank you very much. But my wife and I had a premature child, which was not expected. So needless to say, I've been kind of busy with that and things are starting to calm down. So I really hope I can get back into the flow of this because I really miss doing these videos. I really miss interacting with you guys. And now's a good time, especially with the market activity here. I'm glad to be back. So I'm going to try to do these every single day. Things are pretty good in life and I really can't wait for 2022. So I hope you guys have been doing well. I hope your trading has been well. As always, if you need my help, feel free to reach out to me there at Trade with Doug. So here's what we're going to talk about today. This is why this is going to be good. Because the real question here is what we're seeing now. Is this it? Like, is this that bear market, the beginning of a bear market everyone's talking about? Is it a mass exodus or is this just another buying opportunity? Now, when it comes to buying opportunities, the market's always, every dip buy in history has been a good time, I should say. It's always worked. Every dip buy in history has always worked. But when and how should you be buying this dip? What should we be looking for? We're going to talk about that. We're going to talk about crypto and so on. Now, let's get started here. We'll talk about the SPY. We'll begin with that one. And it's been pretty messy this week. And this correction here has been kind of aggressive. It's got a little bit of teeth on it here. Of course, we were way past due for something like that, but it hasn't been that long ago. Now, you always see a lot of people saying, is this now the time to buy the dip? Well, I can't really say because the market can do anything. I have no more predicting skills than anyone else, but based on experience, what we've seen before, I would say no. I think we have a little bit more of a bumpy road to go through. And if you just take a look at the charts, this is normally what happens in most corrections. We think they come back as a V, but it actually takes a little bit more of that. If you can remember, it wasn't that long ago, just in September, we experienced a correction in the markets of about I think it was 3 or 4%. Don't quote me on that, like 6, 7% on the NASDAQ or something. And from this period here where it started in September, it didn't really iron itself out and pick a direction until the first part of October. So this is about 18 trading sessions between here and there where you had a series of downs, you had a panic rally, right? A dead bounce, another low, a gap, and then a sell-off. And then it was able to pick a direction, an expansion move. And when you look back at most of these corrections, that's how they work. If they don't come back the first day or two, we normally look at it about a 15 to 30-day cycle before the market can slow its volatility down, for the emotions to come out of the market, and for it to settle into a rhythm. Now, whether that's up or down, we don't know that. So based on that, I would say that it just isn't going to come right back. I don't care if it's Christmas and we're expecting a Santa Claus rally. That has nothing to do with it. We're dealing with what we're dealing with here, whether we can argue all day whether this new variant matters, whether interest rates are a concern now, whether the market's taking notice of this. I expected that we would see something more aggressive at the beginning of the year in 2022, but my reasonings are more around supply chain, which I'll talk in my State of the Market in 2022. If this is your first time listening, every year I do a market review. We talked about much of this stuff earlier. So we'll see, but maybe this is what gets the ball started. I don't know. But here, let's look at both bullish and bearish. You did have a good defense here at 450. There was 3 straight days there, Wednesday, Thursday, and Friday, where the S&P got down to 450. And Friday it did hold. And if you look at the candle, you've got a little bit of a wick right there at the bottom, which shows a little bit of aggressive buying coming in there. It just didn't just limp to the close. There was, if you're making the bullish case, there was some authoritative buying. So guys, when you're looking at these candlesticks and you're learning technical analysis, a pattern is one thing, but what makes that special is when you combine that pattern with time and then the emotions of the participants that are trading. This is something I highlight in the checkmark course. And this is where you see people coming in. That's what the wick means. There was authoritative buying. Now, we also could argue that maybe that's just short sellers covering into the weekend. That we're not really going to know until Monday, but here's what we do know. 450 is the line in the sand. It's simple as that. If 450 holds up at the beginning of the week, or there's a couple of tests of 450 and we hold, the next thing in this sequence will be a bounce, just like it's a bounce here or a bounce here. Now, whether that's a short-term bounce or a bounce that takes us back to highs, nobody knows that. Nobody knows that. But we'll just have to monitor it. I do know this, that if 450 doesn't hold, then you can expect some serious, let's say, consequences to the downside. I don't want to say consequences. I shouldn't have said that, because you can make a lot of money in these types of markets. But I would think we kiss the 200-day moving average at 429. And that's really not asking a lot, considering where this has come from. Remember, we were just trading there in October. So it's not like that's that big of a drop. This one is a little bit more aggressive than the last one. I mean, the time that's taken to get 5% in this is much quicker here. So I think this one has a little bit more bite to it. There's a little bit more uncertainty, and that's just the way it is. You have to learn how to trade through these cycles. And once you do, if you're new to this, embrace these times of volatility. This is where you get a chance to make the most amount of money. Now, if you're trying to dip buy and you've got a long-term horizon, well, there's a lot of good things out there that you can buy and sit on. But if you're a short-term trader, then everything you're doing now is condensed. That's how you trade through volatile markets. Your targets are shorter, your stops are tighter, and your position size is smaller. And that's it. This too shall pass, right? If you take a look at the Qs, let's go with the NASDAQ here real quick. Same thing, a little bit more bite in this one, but it was also up a lot more. It doesn't have any support really that it held. It doesn't have like a weekly low tested multiple times like the SPY. But still, it's clear with this one that 378.50 area is your line in the sand. And just like the SPY, if it does not hold this, then you could expect it goes probably down to its 200-day moving average. So there's a lot more room in here to fall. But at least what we do know going into Monday is that the plan should be clear. Those are the numbers that you're paying attention to. We hold them, we go long. We lose them, we should probably be short most things in most cases. And I'll talk about that here in a second. Now, if you look at the IWM, this is a completely different story. This thing's just getting spanked. And I think I read somewhere, don't quote me on this, but I'm going to try to say this. I think this is the 5th fastest drop in the history of the IWM. I mean, that's just nasty, and it's below the 200-day moving average. But just like the S&P, it did hold the lows. It was tested a few times. This 212. So if anybody's paying attention to this or trading this, 212.60s is what you're going to look at. Now, if we take a look at the cryptos, a lot of you have been asking about cryptos, what to expect here. The thing about cryptos is they are a risk asset. And in times of risk where investors and traders are trying to take as much risk as possible and leverage as much risk as possible, these things have a tendency to go up. They become in favor. But just like everything, when risk is no longer a premium, which is what you're deciding now, does this market want to accept risk? And it does not. It does not want to take any risks. Then neither do these. Now, that doesn't mean that the long-term horizon isn't $1 million or whatever these crazy targets are on it. But for the now, in the present moment, I think you have the same situation that you're going to be dealing with this as you are with stocks, because you're getting the same response. Risk is off. We're in a risk-off market right now. So premium assets like this are falling out of favor. You would need more structure, in my opinion. This one here is Bitcoin. Here is Ethereum. They look pretty much the same. Ethereum's doing a pretty good job holding 41.21, but in my opinion, if you're looking to make a trade on this, not an investment, but a trade, then that's where I would be positioning, just seeing whether or not you're going to hold this level. But I think you need more structure in this before you get any real clarity on, is this thing going to, because maybe it goes down a lot longer, a lot deeper. I'm not saying that in 1 month, all of these things can't be much higher than where they are today, but maybe our next step in all of these stocks, in the market, in most of these assets is a little bit lower. And that's what we're going to find out here soon. Now, when you think of the market, The market's actually just, in my opinion, been floated the whole year by big tech and big names like Apple and Tesla, Nvidia, AMD, Microsoft, and the like, the FANG names, right? They've really been the ones that have made this rally what it is, because when you look at the internals, I've been talking about this months and months ago, that most of the stocks have actually been in a bear market. Not maybe most of them, but there's a substantial amount of stocks all year that have just been hell. I mean, look at the once mighty Peloton, a stock that I did so well with last year. One that I thought that, hey, this will hold up. Well, it didn't. I mean, this thing was 114, 140. I know we can make the argument, well, it's a silly, stupid thing. It's expensive. It's just a stationary bike with an iPad. Well, there's dumber stocks that's gone a lot higher. This one's down. You got Disney just getting spanked here. This APPS, some of these stocks I were talking about, literally they're just relentless bludgeoning. PayPal, like no love here for this one. Roku is another one. Lulu, Etsy, Paycom, all of these things are just absolutely drill. I mean, look at this PayC. I mean, these things are just ugly. And most of you know about Docu, obviously, missing earnings here. $100 down. What a mess. 314 is down to 135. I mean, stick a fork in these. It's like there's been a bear market in a lot of stocks. And even at these oversold levels, where some of these probably have an RSI in the teens, there still isn't interest. And when you're looking at these technicals, like I said, there's more combination when you're looking at technicals, because that's not just a setup. It's really emotion. What's the emotional content here? And the emotion is nobody gives a shit. They are not buying this. They're not buying PayPal. They're not buying Dick's Sporting Goods. Everybody needs to get long dicks. Anyway, ZM, another one. All of these things are just dead stocks walking right now. And until they can show some structure, I'm not saying that they can't be great longs and that you shouldn't be looking at some of these longs, because some will come out of this. But you need to see some structure. You need to see some point where the market steps in and says, that's it, we want to buy. And that's not one green day. That's a series of days, a series of higher lows, a series of structure that gives you the confidence, okay, there's money flowing back in, because right now money's flowing out of everything. And if you've never really traded through panic, the thing you have to understand is panic is a much more stronger emotion than greed itself. So most of the markets are operating on greed, but panic and fear are worse, which means most people do stupid things in times of panic and fear. So it can get worse from here, right? So anyway, let's talk about a few names here, because you know what? There are a couple of longs that have decent structure. Let's use that word, structure. Look at this ABBV. This is cute. Huh? Take a look at this bad boy. Now, if you believe that the chart speaks for itself and that you trade the chart, not the market, and that is a market of stocks, not a stock market, this should continue to break out. This thing has been going up while the market's been going down. This is a great box setup, and it looks like it's going to pop this 120. Should trade pretty quickly to 121.53. Keep your eyes on this one. If it holds up and the dips get bought on this, I'm interested in longing it, even if the market looks pretty messy where it is. And I may want to go back and look at this Cleveland Cliffs. I had this a while back and got rid of it, but you have some pretty good support, or at least some support holding in the 1950s, where this thing has been actually since July. It's tested this a few times, but it is under the 200-day moving average. I'm not interested in this one unless it can reclaim that and actually close the day above that level, which I think is 21 right now. Unless it can get up there and close above that on the day, then I'm not interested in this one. So just keep those up there. We'll see what happens with them when the market opens Sunday night. We'll get an idea Monday. Now we can go back here and take a look at a few shorts. How dare I? How dare I bring up the almighty Apple? Yeah, I'm suggesting that perhaps Apple is a short. Remember, it's these that have floated the market. And if they start hitting the FANG names, it can get pretty ugly. I mean, even Tesla, look what happened there. Maybe 160, but this would only be temporary. If you're doing these, it's just for a day or two, maybe 3 days or something like that. And you can take a look at AMD here as a potential short sell as well. I would only short these on rallies. I would not chase any short. Even in this bearish market, if the market starts dumping, I wouldn't just fire away at short. That's probably not going to be a good strategy, because if you open up with panic, you're probably going to bounce. Then you may sell off a little bit later. I still think these semiconductors will be strong out of all of the sectors next year. Even if we go into a bear market, I think these things will handle themselves well through there, because we're going to have a serious, or continue to have a serious shortage there, but that's another topic. So again, these shorts here are temporary. You could be, if you're a shorter term trader, trade some of these ZMs, DocUs, Pelotons, APPS, Dick's Sporting Goods, Etsy. You could trade these on any bounces, but the most important thing, guys, is to pay attention to that 450. We may even get our answer on Sunday night. We don't know. So anyway, I want to thank you for watching this video. I hope you're doing well. It is nice to be back. Feel free at any time to leave whatever you want down in the comments section. You want to reach out to me, reach out to me. It's still support at thelincolnlist.com is the email, or Trade with Doug. Again, great to be back. Hope you guys are doing well, and I'll talk to you soon.